Happy Friday and good morning, good afternoon, good evening, everyone, depending on where you are. I feel like we're sounding one of those TV hosts. Today with the AML Watcher, a webinar, this is to be a fireside chat. I am joined by the amazing Sarah Beth Felix. I had the absolute pleasure of meeting Sarah in my home country in Ireland earlier this year. And I have to say, not only is she an absolute ray of light and energy in our industry, but she's also one of the most humble and nicest and approachable people, in addition to being an absolute superhero in terms of technical expertise. So Sarah, would you like to briefly introduce yourself?
I mean, I don't know how I can say anything that would line up with whatever you just said about me. That was so great. Thank you. Yeah, so I've been in sanctions and AML since right after September 11th. That really, kind of got me started down this path. I was a stockbroker before that. And, my passion and, I was just at a conference and I had several people affirm this to me in person that my passion is operationalizing, because I feel like there's a lot of platitudes in our industry and our platitudes are getting us nowhere, which is why we continue to see all of these basic issues. And so my passion really is operationalizing that. And with that, I've had my own consulting agency for 13 years. I started a bank in Vermont, which most people don't start banks, much less in Vermont, so kind of remote in the US. Beautiful, beautiful place, fantastic regulators there. And so we're in the process of that. We aim to open our doors in the first quarter. And our role really in that is to take something that most community institutions are already doing in the US, but they aren't doing it efficiently and they aren't doing it effectively or compliantly, and to help them do it better. And then in my extra spare time, several years ago, I started another company called Hsbc Research. And I know that's where we connected first, in the restroom, actually, in the restroom at the conference, about what we started to do several years ago, kind of looking at the way in which we're all hardwired to do certain things, right? We all have rose-colored glasses people in our lives. We all have, people who see the worst in everything. We all have a propensity, a hardwiring in some aspects to look at things in different ways. And I think that's what's missing in the AML world. And so that's what we kind of set out to start doing. And so we have about 5.5 years of research and testing, along with 2 psychologists, to really try to figure out what makes a highly effective financial crimes investigator. So that's my third job. And then I'm also a mother, my favorite job, light of my life. And of course, I decided in the middle of all this, why not coach her volleyball team? So that's also what I'm doing.
Why not? Why not? And then at what point in the day do you actually rest? At what point in the day do you have Sarah Beth time?
Yeah, I get asked that question a lot. Sleep is good. I take my magnesium and I'm good to go. But, it's just a short amount of time in which I'm able to sleep. But yeah, it's, as a mom, there are certain things yes, you want to be able to do lots of things in your professional life. But for me, my greatest work is my daughter. And I don't want to have all this career success and lose sight of the gift that I was given. And so, you just make it work. And then after volleyball season is over, I get to nap. So I'm looking forward to that.
It's like hibernation.
Yeah, exactly.
Honestly, it's actually interesting just to start with. I know we're going to talk about fintech, and obviously this is not intended to be a discussion about working mothers, but we both are working mothers, and you've mentioned that already. It is something that before I had children, I could run my entire world off an Excel spreadsheet. I love Excel. And I remember when I was having my first daughter, I got this book. I think it was the Carmichael Good book. And it was basically about, sleeping patterns from, 1 week to 2 weeks, 3 weeks to 4 weeks. And I literally created an Excel spreadsheet from the guidance within the book. And my sisters just both started laughing at me when they realized what I'd done. Both, were parents already. They had children. And they were like, Oonagh, you really don't know what it's like to be a mother. I can tell you categorically, my daughter she followed that schedule like clockwork. And to this day, unfortunately, she still sleeps 12 hours a day, if not more, if I'd let her. And it just worked amazingly. So I've said there's a lot to be said for Excel and being a working mother and bringing those expert skills that you've learned within compliance into your parenting.
I like that. I think we should do like a crash course in that, because I mean, I know we're not the only working parents, right? There's moms and dads, and there are a whole bunch of people that could probably learn from how to have some of your AML compliance techniques kind of flow into your parenting
How do
skills.
they exactly? How does your career in compliance set you up with parenting skills for
Yeah, exactly.
long-term success with
Exactly.
sustainability? But the answer is not a lot.
Yeah.
But I remember whenever I first stepped out and set up my consultancy firm, I was working on average 16 to 18 hours a day. And the thing is, when you're passionate about something, it doesn't feel like work. It was incredible. And I've always felt like that about my work and about working in compliance, but it's not sustainable longer term. And that's where I really discovered the importance of taking time to myself. And in fact, it was a guy called Jonathan yesterday posted this article on LinkedIn, which I had a bit of envy about. I thought, I wish I had written this article. And it was about slowing down to speed up and about legacy. And, what are you building today that when you're gone, you will be remembered for? And, I always think to myself, it would be a very sad existence if we came into this world and we went out of this world and we were forgotten within 2 to 3 generations. I think leaving a legacy behind us is so critical, and that doesn't need to mean that we get Nobel Peace Prizes, or we discover the new version of penicillin. But what I really think within our field is we're at an absolute new frontier that's never been there before in respect of this magnitude of new financial instruments, cryptocurrencies, stable coins, CBDCs, all coming through. Now people are changing how they want to work, how they want to bank. Do I want to go and see someone on the street, in a branch? Well, no, I don't. I want as quickly as possible to move my money so that I can live my lifestyle. And their life has become the most important point. It's no longer we work to live, but we live to work, we work to live. And that's such a big change. And I suppose that brings us nicely on today to talk about kind of fintechs and digital banking. And the innovation that's happening at the moment is absolutely groundbreaking, and we'll get to that and discuss AI in a second. But what would be great to start with is we're getting a lot of discussions at the moment around financial scams. I like how I've segued talking about a parent into financial scams. Did you see that? And one of the things that I'm really conscious about, and even earlier today, I was speaking with a gentleman. He said, you know what, after this call, I'm going to sit down with my son and have a conversation with him about awareness on financial scams. But because I don't think there's enough education happening, I don't think there's enough awareness of the typologies. They're continuously evolving. And obviously within the fintech arena, we're seeing a lot of platforms being used like TradeFi. So let's not get excited and say, new platforms, challenger banks, neobanks, whatever we're using, crypto. That is not a new method of committing illicit activity. It's just an extension of what we already have that's happening. And the question I have is, do you think we're doing enough on education in respect to financial crimes? And also, how is that translating into the controls in banks currently?
Yeah, I mean, I think as far as it comes to the financial crimes that are more scams related, right? Because to me, I see financial crimes as like the top level, and then we've got different, kind of divisions underneath. So as far as it comes to or as far as it goes to fraud and scams, no, I mean, I don't think we're ever doing enough in terms of education and communication. One of my good friends, Natalie Loebner, just brilliant former DOJ prosecutor, she just sent me I believe, a notice of proposed rulemaking in the U.S. from the CFPB, which is our Consumer Financial Protection Bureau, and they are asking people to report when their kids are victims of scams in these gaming environments, which I will not name because I don't want a lawsuit, but all the gaming environments where you can buy things that aren't real. And it's linked to like a parent's debit card, and a kid gets like looped into buying all this extra stuff, or is asked to buy these, different additions to the, I'm trying not to say the actual names of the things, additions to the avatar that they're using, and then they're transferring that to someone else, and it actually results in ended up like loss for the family.
Yeah.
And this CFPB is either asking for opinions on rules or asking people to report. I can't remember. I just kind of glanced through it. But the whole purpose of it was like, this is happening, and it's happening in the millions and millions and millions of dollars just in the US. So I think part of it is parenting. As someone who probably would be labeled a little bit of a helicopter parent. But, I think that is where our compliance field kind of does need to speak into how we run our own households. Like, there's no games in our houses. There's no certain apps that have backdoors to other countries. There's no apps with chat features. There's none of that kind of stuff. And even in the very small gaming options I do allow, it's not connected to my debit card. So, there's certain things like that. And I think, yes, there should be more of an education for parents, but also parents are super busy. So I feel like, yes, there needs to be more, but also at the same time, it's hard, right? You have so many things that are coming at you. I do think that states in the US need to do a better job of facilitating education when we're talking about scams for elderly or disabled people. I feel like that's something when you go out to the adult protective sites at the different state levels, it should be front and center. Is this person saying this to you? Do you feel like you're in love with them? All of this kind of stuff. And instead, when you go there, it's like, up at the top, click here, click here, click here, which we know elderly people have a hard time doing that anyways. And so to me, I feel like, yes, in some aspect, we're doing a good job, but in some aspects, we need to tailor it for the audience.
Yeah. There was 2 movies I watched recently. It was one called Thelma. Out of the US. It was amazing, about this 92-year-old grandmother that got scammed, and she decided to take it upon herself to go in and find the scammer. And the other one, obviously, is The Beekeeper. I watched it to start with because Jason Statham was in it, and then I kind of moved on to think this is actually a good story. But I was going to make a joke about your helicopter parenting. I was like, Sarah, I wouldn't see you as a helicopter parent. No. Does your daughter have any extracurricular activities? Yes, she plays volleyball. How involved are you? I'm the coach.
Exactly.
Like, Jesus Christ, Sarah.
I don't know. I think for me, seeing so much and living for several years over in Asia, seeing so much of the things that I felt like were preventable just really kind of informed my style of parenting. And of course we all have different styles of parenting, and there's not any, good or bad in it. It's just more of, I can't unsee what I see in my work, and I haven't over the last two decades. So for me to not have that inform how I treat my most precious thing, which is my daughter, then that would be like a failure on my part. It'd be like, kind of a separation from reality. So I know, but I mean, if you ask anybody who knows me,
I'm winding you up. I'm being sarcastic, but no, honestly, I think it's amazing. But exactly what you're saying, I think the vulnerable we're definitely not doing enough. And unfortunately, these are the ones that we are ending up with worst case scenarios. And some of the ones that I've seen recently, the financial scams have, and again, I know we weren't here to talk about financial scams, but they go beyond kind of their psychological manipulation to an extent that they're preying on vulnerabilities of individuals. They're targeting widowers, who suddenly think that they have a second chance at life with this new person. And, if they could only reverse engineer some pictures, even on Google, they would find out that who they're talking to is a well-known Korean media star. But they seem to think that this person living in New York, who's from Singapore, who clearly isn't, who's Korean, but they don't see that. It's a very, very strange situation. So moving onwards and upwards. So key trends that we're seeing, obviously, I mentioned there at the beginning that lifestyles are changing, how people bank is changing. Obviously, financial inclusion has been a big aspect as well. And, this is a very exciting aspect of CBDC, central bank digital currencies, that it should open up much wider capabilities to the unbanked. And obviously, there's a lot of opposition on CBDCs in some jurisdictions as well, in terms of the increased control there will be in terms of currency circulation. I think as one person said to me, "Oh, have you seen that movie with Justin Timberlake? What's it called? In Time." And I said, "Yes," where they have that countdown on their arms with how many. He said, "That's what it's going to be like." I said, "Really? You think?" I don't think it's going to be exactly like that, but to just talking about CBDC and fintechs and stable coins, and obviously taking each one of those separately, how do you see that convergence happening within the digital banking space? A lot of trade FIs deliberately have stayed away from digital currency exposure. With the immersion of CBDC, they will have to incorporate that, given the fact that there will be a reduction in fiat. It is just a digital version of fiat currency. And obviously, many banks, the trade FIs have said, we don't deal in cryptocurrencies. But as we've seen over the past couple of years, there's been a significant increase, especially in institutional banking, for the adoption of derivative products that allow them to have exposure. So how do you see products changing as we move forward in the more digital space and banking?
Well, I would say first and foremost, I'm not an expert in any of that. I stay in my lane in terms of the sanctions and AML perspective. So for me, as far as the usage of those products, the growth of those products, I think that we will obviously continue to see, both from the fintech side using fiat, as well as the convertible virtual currency side or digital asset side. We will see both of those just continuously grow and shift and change with consumer needs. I think from an AML and sanctions perspective, and I wrote an article on this. I don't know if I sent it to anyone. I just wrote it because it's like journaling for me, about how the FATF really needs to, if we are going to have a global approach, a global consistent approach to the emergence of technology when it comes to financial products and services, that the way in which the FATF governs the new technology section, which is recommendation 15, I think, the way that they kind of lump fiat fintechs and crypto or digital assets into that one recommendation does a disservice to, I think, every country. So I've long lobbied for the FATF to actually make a 41st recommendation, and to have that be the digital assets, convertible virtual currency, the non-fiat, essentially, form of financial technology, non-fiat, needs to be the 41st recommendation. So I think from that perspective, which is my lane I stay in, I think that has to happen because we have an explosion of fintech, and we're seeing fintech. And when I say fintech, I don't mean crypto or digital assets. I mean fiat fintech. Now, several of these fintechs will actually have, one or two of their 11 or 12 products or services linked to a digital asset type of funds flow. But the originality of most fintechs are not all crypto or all digital assets. And so that's where I think, as far as what the future could look like from a product services, I don't know. But from our framework that we have on a global basis, we need to make sure that we're seeing non-fiat financial technology in its own bucket, because we have countries that don't even recognize it as a legal form of currency. And so, that to me needs to be its own thing. And then that gives us enough breathing room in recommendation 14 and 15 to actually evaluate the various ways in which we have regulated, unregulated, and partially regulated fintechs.
Yeah,
so
it's actually It was really interesting in exactly what you said there about, fiat versus non-fiat. I was watching an interview with this Australian lady that, and I forgive me, her name eludes me at this moment. And she said the biggest mistake that we made in the crypto space was to call it currency. And that has what's now blurred all of the lines, because there is that aspect of, well, it's currency, therefore should this be regulated? And if we had just kind of stepped back and looked at it in a more pragmatic way and maybe give it even a simpler naming convention, would we be seeing what we're seeing now in this space? Well, of course, yes, because there's an evolution of products. But I do think exactly what you said, fiat, non-fiat, that's the distinction we need to make. That's the simple distinction, the 101. And I'm a massive believer in keeping it simple and going back to basics and then emerging from there. So I also think as well, we're trying to treat, and I know, and again, I respect what you said about keeping the lanes, but I think what even in the AML space as well, the AML controls, the financial crime controls that we have, if we take a step back and look at it, they're just common sense. It's what we're trying to do is protect our institutions, the integrity of our financial systems, and also our customers from financial crime. And we don't want our books to be used as conduits for illicit activity either. And a lot of the controls we put in place, and actually a lot of the regulation, it's common sense. It's not rocket science. And what I find over and over again is that we have over-engineered the controls to an extent that we can't see the wood for the trees, or we just have lots and lots of people sitting there, going through alerts, etc. And nobody's really taken a step back to think, hey, does this make sense? And so to that point on financial crime legislation, we've seen recently, and I say recently, over the past number of years, add-ons and add-ons, every time a new trend or issue arises, even though we have principles-based legislation, in some instances, we've become more prescriptive. We have become, to an extent, rule-based. And that, in my opinion, removes innovation, because I wouldn't even say that it removes the ability to people to think for themselves. And in some instances, people are not thinking for themselves because they're ticking the boxes. So do you think that with the development of the fintech sector, if we take a step back and we look at the financial kind of crime frameworks that we have in place, is this an opportune moment for us to look at how we can adapt technology to remove the mundane day-to-day issues? Regulators as well may be assessing, actually, we asked the banks to do this, but we're actually better placed to do this because we've better information, we've the integration with the intelligence units, etc. And is this a moment in time with the adoption of technology that we should maybe rethink controls and who is actually doing what in respect of identification?
Yeah, I mean, I think, unfortunately, I think both need to be done at the same time, which is almost impossible. I mean, when we look at how long it takes for, an idea or draft legislation really to become law in the US, is a long ass time, like so long. And so in the meantime, in the years that it takes, we have professional money launderers that know exactly what our vulnerabilities are and are going after them. But at the same time, I'm not for over legislation. I'm for consistent legislation. And so, if I had my way, I would take a whole bunch of practitioners. I think part of the issue is we get people who have never written a SAR or an STR, people who have never done a high-risk customer review or an EDD review. Never written a narrative, never written a case investigation file. And then we get all these people that are like former executives at the largest banks that are not in the weeds. And we mix them with people from academia and government. And then we have them establish global standards. And then we penalize banks when they miss the mark. But really what was missed was unclear, unrealistic expectations that have never been fully operationalized because they were not written by, because they weren't written by operators. Yeah. And so I'm certainly not for more legislation in some aspects. I'm for even-handed regulation. Now, that I will say, most people who follow me on LinkedIn know that I am the hill that I'm going to die on is closing our regulatory loopholes that allow trillions, with a T, trillions of US dollars to flow through without AML eyeballs every year. And so we do need, I guess in a sense, more regulation, but really it's just the removal of those loopholes to bring these global fintechs that are in the US and payment firms under, have them treated like a bank or like an MSB rather. So, yeah.
No. I didn't mean to interrupt you there. Carry on.
Well, so I think in that aspect, we do need to, maybe have more regulation, but to me, that's not more regulation. That's regulation that should have happened, 20 years ago. And so it's, to me, it speaks to one of the biggest issues, which I'm constantly, talking about, which is how the US will sit here. We will evaluate, our different agencies will evaluate on their own criteria other countries, but they don't, it's like a log and spec moment where, we look at some of the island nations and we say, you are high risk and we are going to cut you off, right? Which makes me mad, right? That was 2015, 16, and actually it's still happening. But then we sit here and go, oh, but we were eight years late to roll out beneficial ownership, 8 years late to roll out beneficial ownership. And when we did roll it out, there's a whole bunch of issues with it. Now we have the CTA and there's a whole bunch of loopholes in that one, right? So, and while I understand some of the reasons why from, sponsors of bills and things like that, it still is an unfair balance where the US is like, you country XYZ are higher risk because of this, but we aren't looking at ourselves and going, actually, we don't regulate payment processors from an AML perspective. We don't regulate most of the fintechs, or they're partially regulated. Where every other country in the world, you go to Oman or Bahrain, and they're fully treated like a regulated financial institution. And in the US, we don't treat them like that. And that's a problem. And so, now we're starting to see some like traction in the DC area on this, which is great. That makes me very happy because I've been writing about it for 10 years. So I am happy. But so that's kind of a long answer to your question. But, I am in favor of more regulation in a sense where we should have had regulation. But I also think that when regulation does come down, whether it's from the supranational FATF or at the FIU level, that there needs to be people who have actually done the work in the room.
Exactly, Sarah. I couldn't agree with you more. Sorry, I just saw a comment coming through there, and I'm just going to call it out as it is. It's good. We've got a comment from someone that we have no idea about the criminal typologies related to how they might actually obfuscate crypto. I don't actually think we even went down that road of even having that discussion right now, but I appreciate that this gentleman believes we have no idea about it.
Yeah, no, he's, I know him. He's a brilliant former federal law enforcement, and he is 100% accurate. I think he's talking about us. I'm like, what? Yeah. Oh no, I don't. I think David would.
I thought we were being trolled, David. Thank you.
Yeah, I think he was. I mean, I would assume, having conversed with him before, that he's talking about they as in like the regulatory agencies really have no clue about criminal typologies and how they.
Well, they don't. And actually, something that came across my desk a couple of weeks ago, and I love it in our field when we have these absolute aha moments. And it's happened to me a few times during my career. It happened back in 2013, whenever the new AML legislation came out in Singapore, and I was able to sit back, go through it all, and think, actually, I could see the whole jigsaw and how it went together. It also happened when I got into kind of fintech and crypto back in 2020, in terms of going into the consultancy perspective and realizing that I was in an environment that wasn't yet regulated, and realizing at that moment in time, in TradeFi, we do not do risk-based compliance frameworks. If anybody says, "Oh, our framework is risk-based," it's a joke. You're ticking a box against the regulations, and you're just hoping that nothing sticks when enforcement actions come through and they could land at your door. But one of the things that happened this week, which was just another moment for me, or a couple of weeks ago, was I was looking at a financial crime typology where a gentleman had been scammed out of nearly a million pounds. And I saw where all of the payments had gone offshore. I could see where all of the different kind of network went. I was able to use very, very limited tools that I had access to actually find out who some of these key persons were behind it, the companies, etc. And of course, we, having worked in this industry for 20 years, even with likes of Google, etc., we can do a pretty okay job in doing searches. But it suddenly dawned on me that all of these institutions where the monies had gone to, let's say, for example, there was 10 payments and it went to 10 different banks overseas in say a location or multiple locations. All of these banks get notified of this situation. And what do? Well, they file an STR, potentially close the account, and that's the end of that. And that goes to their FIU. Then back, let's say the UK, the individual whose account was the victim, they'll file an STR with the FIU in the UK, the NCA, and then that account will be closed, or that account won't be closed, obviously, because it's the victim's account, and that will be the end of that. And it suddenly made me realize that as these banks that were in the other locations, they had such a limited view, and their FIUs also have such a limited view, but the originator, the victim's account, that FIU had everything. And as I said, even with a very limited Google search, I was able to pull out some of the most incredibly disturbing and also shocking details about what had actually happened here. And then I was kind of like thinking about our entire STR. And I'm sorry, I know this has gone off on a tangent a little bit, but I then began to start thinking about our suspicious transaction reporting, our suspicious activity reporting, how it's working. And obviously everybody's like, oh, we need AI. Well, of course we need AI within FIUs, but it's actually not even the answer. We need a better way of understanding how we're going to detect these networks. And also the question was, well, once I've made all of this detection, who do I speak to? And luckily for me, because of, like yourself, being in the industry for so long, I could pick up a phone to whether it's a government official, a regulator, one of the senior people at respective banks involved, and said, hey, by the way, FYI, we found this in your books. You might want to take a look at this. Or, hey, what's happened with this? And, some of the feedback was, actually, we've already closed that account and submitted an STR. And so obviously the monies had flown the nest, which is to be expected in any of these events. But I'm just sitting back thinking, to manage financial crime, it's as you said there, regulation, it's maybe not even getting the right people in the room is key. We need innovation. We need a group of different skill sets and mindsets. But I really think the moment has come, a new frontier, so to speak, where we need to take a step back and say, are we actually detecting this and managing it in the right way? Or is this just continued admin work and noise? And so that's something I've really been kind of overthinking, I suppose, the past couple of weeks. I don't know what your thoughts are on it, but it was just seeing this on paper and seeing it all play out, and then having myself to try and do this background investigation work, and then realizing where victims are. It's just not working.
Yeah, I definitely agree. And, we have Jim Richards in the US here, who's quite vocal about some of the public-private partnership, like in terms of the feedback loop, like a true feedback loop to say, hey, out of, the 3.4 million SARs or whatever was filed already this year, or maybe that was last year, which one of these actually resulted in a case? And I think that's a valid question. However, I do think part of trying to answer that is very difficult because you're dealing with, basically a clue that was submitted. And while it may not necessarily make or break a case, that life cycle, there's many aspects to that life cycle of the SAR actually feeding into something, and then that feeding back to the institution, and then the institution knowing that what they're catching is actually what they should be catching. I mean, that's 3, 4, 5, 6, 7 years, depending on how long that case takes, and then once we start asking that question, we have to ask, well, what kind of subpoena quality are we looking at, right? What kind of data are we able to give in a legal process request, which is what Natalie, I know IRS CI has done a ton of great work trying to streamline that, because that is part of the answer to that question. I mean, it's not the only answer, but it's one of, I think several answers to that question. I think, at least in the US, our regulatory environment with the national priorities that were released by FinCENN, as we see the final rule and everything, all that documentation that we expect to have come out before the end of the year, I think that's a noble step forward in terms of like report suspicious activity. Now it's like, hey, go after these 8 priorities, right? And these things are not necessarily like, they aren't, to me, they're a little bit more of the 30,000 foot level. And then as you look at those ones like proliferation financing, that one is going to take a whole bunch of forms. You have the large banks that'll probably own the majority of that risk, but you also may have some other key risk players within that may reside in community bank institutions that are banking the manufacturer of those coils, right? That are used for dual purpose.
Well, 92% of financing is open bank for trade. So, we're trying, and that's a good estimate. So basically, we're trying to regulate within 8% of the financing within trade, within trade. And if you then look at a trade itself, it's so, and to this date, it's so shocking. Like COVID was the biggest eye opener, how paper based it is. And we've looked at blockchain solutions in respect of like, how can we improve controls in trade-based activities. And blockchain works onshore, but the minute it goes offshore, and because of the lack of regulation across the spectrum, because of the lack of regulated, banks that are involved, regulated financial providers that are involved, it's a very, very difficult space. So proliferation finance is it's a pretty easy one in terms of getting around regulation, as long as you don't need to bank within the banking sector for financing purposes. It's terrible to say it, but it's true. And also, one of the things I'm very, very adamant about as well, and I'm very vocal about, is we always kind of talk about, AML and CFT, kind of like AML/CFT. They are 2 completely different beasts. And one of the things that's very challenging about CFT is the fact that a lot of the money that goes into terrorist financing is from completely legitimate sources, because it's based on belief systems. And this is something as well that we see, when you see an AML presentation, it's like, oh, and CFT, you'll get 2 slides in CFT. And you're like, well, actually, what am I supposed to do to manage the risk here? Well, technically, it's very, very difficult to identify terrorist financing, if at all, within your books, because a lot of it is also money-based, i.e. cash-based. So one of the things as well, it's actually an interesting question came through here from Job Shivachi. I hope I pronounced his name correctly. And this is something we both touched on recently, like payment gateways. He said, like, are fintech banking money service businesses? If yes, are they licensed for cross-border transactions? We can answer that question first if you want, Sarah, but I wanted to kind of touch on that payment gateway issue, because it's something you and I ended up having a discussion with via LinkedIn probably about a month or so ago. And it was something that really surprised me, that we literally have an entry point into the banking system through payment gateways, and they're not regulated. And it's, and this is money that's moving off non-regulated platforms into people's bank accounts. And again, going back to the beginning, the luxury of fintech is it changes the ways in which we can bank in a digital way. And what I'm concerned about is the fact that, in changing the way that people operate and changing the way that people do business, we've actually opened ourselves up to some kind of clear pathways into the regulated sector that aren't protecting the banks. And then the individuals are the ones that are actually suffering the detriment because they're not able to pay their bills, because they can't access their monies, because their bank accounts have potentially been suspended or frozen pending review. So I don't know if you want to, I know that's a lot to unpack there, but I don't know if you want to pick up any of those issues.
Yeah, well, actually, because the question didn't come up, so if you could maybe post it in the private chat, because I didn't see it. But
it said, are fintech banking money service businesses?
Like,
and if yes, are they licensed for cross-border transactions?
Gotcha.
Well, any
yeah. So in the U.S., if this question is regarding U.S. regulation, most fintechs, if it is, okay, I see it now. Fintechs are not always MSBs in the U.S. Under the FATF definition of an MVTS, money value transfer system, yes, fintechs in the US should be considered an MSB and therefore under AML regulations in the United States. But we have 4 loopholes that allow legacy payment companies, payment firms from like, which now we went from like normal payment processors to the PayFacs, to the gateways, to the processors, to the ISOs. And now we've got all this like chopped up version of payments when it comes to card and ACHs. But if we were to just label those, just lump them all under payment companies and fintechs, the reason why we're number 1 in the world for fintech startups is because you can come here and roll out your fintech and most times have little to no AML regulations, where you take that same payment product to the UK or to Australia or somewhere in the Middle East.
Yep.
And it's fully treated like a regulated institution. So there is no clean answer to that, but I will say the majority of fintechs that you think of when I say the word fintech in the US, they're all partially regulated. So they do have an aspect of their business, maybe the P2P side of their business does fall under their MSB registration under FinCENN, but then the majority of the stuff that they do does not. And they aren't doing anything bad, right? They are doing exactly what our law requires of them, which is nothing. So, so it's not, as far as cross-border, depends. There's no exception in our laws that say if this money goes cross-border, it has to XYZ, right? It meets this criteria. That's where I think Austrac really does a great job in how they define their different institutions and who has to comply with Part A and Part B and Part A and B. And I mean, it's actually quite a joy to read when you read it, because it's like, if you do this, then this applies. If you do this, then this applies. If you do this, then this applies. And I love how that's written. But
everyone loves a good flow chart.
I know. I know. It is, it is very, very clear. I mean, not that, any of these countries are without fault, right? We all have areas to grow and our regulatory environment needs to change and shift. But if we're going to compare what we have in the US to another country, I would love for us to take a page from Austrac and how they deal with the functionality of the product.
Yes.
And how that drives the regulatory oversight.
Yeah. In fact, I had the absolute pleasure of working alongside Paul Jeftovich, who used to be the CEO of Austrac when I was at Hsbc. And he's now the global head at NAB, National Australia Bank. Incredible gentleman, and instrumental in making common sense of regulatory requirements. And that's what I absolutely love. It's, his background was, and again, going back to innovation, you mentioned a really important point there earlier about having the right people at the table. His background is law enforcement. He was in the police for, I believe, 30 plus years. And he was able to bring that kind of layman practical aspect into the regulated environment. And then we end up with legislation, which, by the way, works because it's simple and it's logical. And I want to see so much more of that as well. You mentioned about Jim Richards, talking about and banging the drum about PPPs and, upward versus downward communication. And we've seen many industry groups, again, Paul, when he was in Hong Kong, spearheading a bringing together different banks to talk about typologies in financial crime, because we're not getting that downward communication from the FIU. And that's not just a Hong Kong issue. These entities have been set up in the UAE, have been set up in the UK, in the US. It's just we talked about it in Dublin as well, public-private partnerships and the importance that they play. They are critical, but they're critical when the information is being shared in the right way so that we can all implement it. And as you said also earlier, Sarah, which is such a critical point, financial crime typologies are evolving quicker than we can regulate for them. And if we're trying to regulate against them, that's a big mistake in itself, because the sophisticated launderers will always be 2 steps ahead of us. And I suppose that then nicely brings us and segues us into AI and the adoption of better technology and subsets of artificial technology into our monitoring frameworks so that we can identify complex networks. And HSBC is actually a great example. They've publicly spoken about how they've adopted Google AI into their TM framework, and it was able to identify complex networks within their books that they didn't even know existed. So what can we do better? I know I have my views on it, but I will let you kind of go first because we've only a few minutes left here and I could talk all day. In respect of technology, are regulators doing enough? Are we allowed to make mistakes? And are sandboxes the answer? Are we being given enough support to implement technology, both in terms of skill sets and financially as well, given the fact that this is imperative for the protection of the financial system? So what are your thoughts around that?
Well, I always see AI and machine learning as like one big bucket. And while I am not an expert in either, I think there is room for both AI and machine learning. I do not think it fits in the area of decision making. I think that's where it should never fit in terms of, is this alert suspicious or not? That type of decision making, I do not believe it should sit there.
Yep.
Because there is so much contextual information. And I worked with a trained AI company years ago based in Charlotte. And they were like, can you tell us how you would find a terrorist financing typology in one of your community banks? So I walked through a known one and we trained the model over and over and over and over. Well, what it revealed was something that we would call bias, which I would not think I'm biased, right? But because of important contextual elements to the customer as well as the transaction, they were like, oh, well, this, and so I think a lot of times we try to apply AI and machine learning as like a way to eliminate the human in the decision making, and we really need to not do that. One, I think there is some valuable moments we can have back to ourselves if we apply a machine learning model. Like I just saw what Will Lawrence was doing at Greenlight. And at first, and I was kind of stinky because I was like, oh, more AI stuff. And then we get on the call and I was like, oh, actually, I love this. Can y'all do XYZ? Because there's a lot of times, I still write SARs. I still write case investigations. Yep. I still write high risk customer reviews. I am dispositioning alerts 23 years into my career. And it's a choice for me because I never want to be so far removed from it. So, and it helps me inform what is going to be a good solution for my clients. And so when I was talking with Will, he was showing me what Greenlight was doing. And I was like, oh, well, I like this aspect of it. And I think it would actually make it more efficient in terms of taking something like an operating agreement and having that distilled down to like an actionable item for a analyst when they're doing a review. I think things like that can definitely be helpful. My asterisk to all of what I just said is AI is only as good as the human that trains it. And exactly. So if we are looking at AI as a solution, we have to look at the humans involved in the AI training. And I will say most AI models are being trained by people who are not operators in the AML space and in the sanction space. And that's a dangerous thing.
Absolutely. And, yeah. Go ahead. Sorry.
And I think a lot of our monitoring systems that are touting AI as part of, we have AI, so therefore, our results that we're giving you in the alerts are going to be better, but they're not telling us what their AI is decisioning. They're not telling us who is training their AI. And that goes back to the Hyper S research stuff that we've looked at. If you have someone training an AI model that thinks that Jeff Epstein didn't do what he did, then your AI model is going to suck. And the next thing you know, you are going to have a consent order because it's being trained that that's not suspicious. So that's where we really saw the application of HyperS research and the things that we've been looking at there also applying to these AI firms, because we need to make sure that the humans that are training the AI models are also hyper suspicious.
Absolutely. And there's no kind of bias, within the systems. And you're absolutely right. And I think that we're beginning to see that in some fraud systems now, especially, and again, we'll come back to financial scams, where systems are disregarding alerts because they've closed out an alert that's similar in nature. So this shouldn't be, or they've closed out a previous alert on that account. So we're not going to have any future alerts are actually not going to be, are not going to be escalated. AI will not replace people. We need the system to identify potential typologies and then escalate that so people can, with the right skill sets can review those as well. And as you rightly said, we need the right people to train the system, and then we need to test the system to make sure that they're not learning bias as well. And we're a long way away from that. And just before we take this other question on payment gateways, because that was something that I was quite surprised about whenever you said it to me. But then I understood exactly, they're just a service provider. They're not actually operating within the financial sector. They're just moving, it's like like a shipping company. They're moving one thing from A to B. And in this case, it's money, but it's not their money. It's just their it's a shift over. And obviously we talked about that in the context of OnlyFans, and we don't need to go down that whole avenue. But what surprised me was when I spoke with Keely, who's the CEO of OnlyFans, and she said, like, if she's an ex-lawyer, it's like, if you don't think our controls, are great, have you looked at them? Have you tried it? So I did what she said. I created an account as a user, and then I created an account as a creator. And the controls were more stringent than some fintech and crypto firms that I've seen onboarding controls for. And I was actually a little bit shocked. And I said to her, but you know that you're not required to have it. She goes, no, we're not required to do it, but it's the right thing to do. And having worked in legal my entire career until I moved into this role, it's what we need to do to protect our customers, to protect the business. And it was such a great thing to see. It's another time we can talk about kind of monies, where they're coming from, etc., sanction screening, etc. But it really surprised me to see that you have payment gateways that are moving, money from A to B, not regulated, none of it's their concern. And then you have these platforms who aren't regulated either, but are actually making sure they're putting in place controls, and because they want to make sure they're protecting their customers and their organization. So that was something that was really, it's actually, for me as a compliance professional, I was really humbled to see that that's happening outside of the regulated environment by people who want to do the right thing. And I suppose that comes back to what I said earlier in terms of financial crime frameworks. If left to our own devices, without over-regulation, would we still get it right? Well, the answer is there's people out there that are getting it right, but there will always be bad actors, hence why we have regulation.
Right. Yeah, exactly. Yeah, no, I think the only thing with that, and it's not just an OnlyFans thing, it's every platform.
Mm-hmm.
Right? We have event platforms, we have other creator platforms, yeah. We have FinDom sites, no one's here to judge what people are doing and what people are producing if you are an adult, and no one is getting harmed, right?
What's FinDom?
The financial dominant, like you're a terrible person, now pay me $1,000. Like there's a whole bunch.
I thought it sounded quite sexy.
No, I mean, it is. It's in that same vein.
I see. Okay.
Yeah. Yes. So just like if you Google it, just Google it in a private browser, like not somewhere your kids can see it.
Oneself.
But I could care less what these people are doing. What I care is that it makes it disparate. And this kind of speaks to the question that we have that's hanging out there. Yeah. It speaks to the disparate nature of the data. So OnlyFans is collecting this information, but their payout rails is completely, they are completely unregulated. Yeah. So that money leaves without that KYC data that OnlyFans has. And that money goes to a bank account. Well, that bank account doesn't know that ACH description from Phoenix International with an F is actually the outbound payment rails of OnlyFans, unless you Google it and go to the deep, dark threads of Reddit, right? And which bank has, the opportunity to do that?
Source of information for all financial crime fighters out there. When in doubt, go to Reddit, certainly, and write that as well in your case note.
Yeah, exactly. Yeah, but I mean, I think it speaks to the question: is there a lack of information data shared between the companies that evolve the methods we have, or in order to evolve the methods we have to fight financial crime? Yeah, I mean, I think between the law, like the law enforcement space, the private sector, and then all the different variations of where the data sits and where the data flows through, and the transaction information, the customer information, it all sits in different spots. I think, yes, there needs to be better data sharing, but unfortunately, we have so many laws, which we see this in the EU. We have so many laws governing the data that sits in that regulated entity versus another regulated entity, and how it can't be shared. So, I think one of the things we do have in the US that I do love is called 314B. And it's where if another registered financial institution, that can be an MSB or a broker dealer or a bank, if they're registered under 314B under the Patriot Act, then I can actually message them. There's a whole PDF. I can go and I can say, hey, I have this client. I see that this client is wiring funds to your bank. Can you tell me a little bit more information about what they're doing with these funds? We believe it to be a little sus, like my daughter says. And the bank actually can respond. Right, exactly. And the bank actually can respond in a legal way. And so in a legal way. And that's where I think that's helpful, but it's not a requirement. So of course we have a lot of institutions in the US that don't use 314B because they don't see the value in it.
Yeah, I love it. How do you know you can share this information? I have a PDF.
Exactly.
No,
we are so advanced.
Any questions at all on that one?
Exactly.
Legal basis to your argument has been answered, literally.
Right.
But no, absolutely. This is where blockchain plays such a critical role in packaging up data that's already being discovered, so it can be discoverable through the chain. And, if we're looking at pragmatic ways of using technology to our advantage, this is a great example in that regard. As you rightly said, all of this KYC data has been gathered, and it's been gathered in the right way for the right reasons. And then through the chain, it's dropped because through the payment gateway, it's just, it's obsolete in that regard. Sarah Beth, that's a really, really interesting observation. And actually, I think you've hit the nail on the head there. This is one of our biggest gaps. And we talk a lot about blockchain use cases. A lot of the data protection rules that we've implemented, we've shot ourselves in the foot, not just for, sharing data, but also within organizations conducting investigations, having to get approval from various sources in order to share data. I always remember when I started out, it was the Swiss law, which was the most stringent, but you could always share data for risk purposes. And that no longer applies under the GDPR, et cetera. So again, we've done something great to protect data, but in the interim, what we've also done is shot ourselves in the foot in terms of being able to combat financial crime. So I think we've come up to the hour. I think we've kind of 2 minutes left. So Sarah, do you have any kind of closing remarks, anything like additional you think it's important in respect of fintech and moving forward that our listeners today should be aware of?
Yeah, I think I was looking at something yesterday. I'm gonna make a post on LinkedIn because I've hit my limit, which is typically what spurs my LinkedIn posts, is when I'm like, from the fintech side, what I'm seeing a preponderance of is these rah fintech conferences, right? Everyone's like, oh, let's innovate. And then you go out and you look at the agenda and they have nothing on AML, nothing on sanctions. It's all this push for innovation, push for vendors, but nobody's talking about like some of the beautiful design that actually happens in early tech stack days can be leveraged in a highly efficient manner for AML and sanctions compliance. But nobody's talking about that. So I actually went out and I pulled 15 conferences just in the US that are occurring this year or have occurred this year. I counted, because I looked at all the attendees that typically go, we're at 60,000+ attendees across these 15, I think, 15 different FinTech conferences. Only 2 panels are on AML, and both of them are how FinTech is driving change in AML. Nothing about, these are AML typologies. These are sanctions issues. This is what you need to be doing if you're a FinTech and you're going out and you're trying to get funds from a VC. This is what your VC should be asking you. Hey, VCs, you have a whole bunch of money. You want to back some unicorns. Great. These are the questions you should be asking. And we're seeing all these failures. And I can't help but think, is it because no one is talking about this? It's just like rah, 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 and none of the real stuff. So if you're attending a FinTech event, I would reach out to that FinTech event and say, hey, I would love to see more AML and sanctions panels.
Absolutely. You know, one of the things we always have to remember is these platforms have been built by tech enthusiasts, by engineers who've actually, in many instances, never worked in the regulated sector before. And they're not asking the right questions at the forefront. And they're not necessarily building at the outset for a regulated environment because they're not aware of the regulations. And that's why it's so important that they're hiring people in the right capacity to advise them in this regard. So, and this awareness starts at these conferences, at these events, at the likes of, you know, like Money 2020 or any type of VC event that you see popping up. People need to be going there and ask, you know, there needs to be panels on like, what do I need to understand to move forward? What is the regulatory environment that I'm stepping into? How do I get better information with regards to that? And as you rightly said, information is in particular around sanction screening, financial crime, etc., AML, it's critical. Yeah. Sarah Beth, thank you so much indeed for your time today. I've noticed you haven't got your Clara on anymore.
Oh, no, I forgot it this morning.
Yeah. I'm going to have to speak to Laura.
I will wear it to London. I will wear it to London.
Brilliant. Well, I can't wait to see you next month in London. I did see that we have the president of FATF as the keynote speaker. So well done to Stephen and Jimmy on that one. Yeah, so can't wait to see you in London next month. It has been an absolute joy to be seeing you again today. Can't wait to see you next month. And to everybody that joined us today, thank you all so much indeed for joining us. And until next time, have a wonderful day ahead.
Thanks. Bye.